Delegates, welcome back to the last technical session of today's workshop. May I now request our speaker Saradha ma'am to come and operate the device, please. I'm happy to introduce Saradha ma'am. CA Saradha Hariharan is a practicing chartered accountant, specialized in GST. She is the founder partner of a leading LLP firm. She started off her earlier career in a Big Four audit firm and also has the experience of handling key positions in finance and taxation in large scale industry. Currently in her indirect tax practice, she is heading advisory compliances, audit litigations for various industries, including but not limited to marine exports, automobile, power sector, IT, air conditioning, HVAC, FMCG, real estate, healthcare, etc. Her key expertise is on GST refunds, FTP, and other benefits to large-scale exporters and handling litigations. She is a regular speaker on GST at various forums, including our institute, CMA, GST departments, various Chamber of Commerce, indirect tax professional forums, universities and colleges, and other professional and educational institutions. She has also authored and reviewed the GST publication by Indirect Taxes Committee of ICAI on the following books: Handbook on Interest, Late Fee and Penalties, Practical FAQ under GST, FAQ on Supply and Taxability, FAQ on Input Tax Credit, Background Material on GST, etc. She also actively writes articles on GST in various professional newspapers, news publications, including ICAI. With this brief, I present before you Saradha ma'am to handle today's session. Before I hand over the proceedings, I may now request any of the senior member to come forward and present a memento to madam. Sir, please. So what's your name, sir? Sorry, Ram Srinivasan sir will present a memento to Saradha madam. Over to you, Saradha madam.
A very good evening to everyone. So I hope usually the post-lunch session would be a little tiring, but it's equally the same applicable for the last session as well. But I'll try to make sure that I keep you all, engaged in the conversation as much as possible. Let's keep it lively, and we'll have more of brainstorming discussions. I don't want it to be a one-way communication. Please don't feel free to actually, interrupt me and ask those whenever you feel like, right? So thank you so much, SIRC Institute, and especially to Rahman sir and Monica for giving me this opportunity. And thanks for the kind introduction as well, sir. So moving on, today this topic is going to be on recent circulars and notifications other than rate changes, because we believe rate changes have been discussed in detail in the morning session, right? So we will not be covering that. So before we get into the topic, there are basically two types of notifications. One is central tax notification, the other one is central tax rate notification. Okay, so central tax rate notification is going to be discussed about all the rate of taxes, be it on goods or services or exemption, RCM rate of taxes, whatever it is. So all types of rates related notifications will be covered in central tax rate notification. So that is not going to be part of this discussion. It's going to be on central tax notification, wherein everything other than rates will be given under that. Okay, and then we'll also be discussing on circulars, having told that circulars has a very limited application because which is first of all not the law, but having said that, circulars have a very good validity when it comes to the taxpayers, because taxpayers can always claim benefits out of circulars but it's not mandatory to follow the circular. Circular is more of just a clarificatory in nature. It is up to the taxpayer whether he wants to follow it or not. But having said that, when it comes to the officers, it's binding. For the officers, the circulars are always binding. That's why if you see most of the circulars will be only taxpayer friendly. It will be only in the nature of a clarification. Okay, that is one thing. And having told that, when it comes to notification, notification is something that is issued under the rules predominantly. Okay, though yes, it is also issued under the Act. It is predominantly to prescribe the procedures what is already given in the rules. So how it goes is that, first of all, there is constitution. From the constitution, the power is being drawn for enacting the law. That is what is CGST Act, SGST Act, and then UTGST, IGST, all these Act. And from the Act, the rules are also being prescribed. The rule cannot override the Act. Rule has to be under the Act, right? So if the rule is going to override that, it's ultra vires the Act. Okay, so from the rules and drawing powers from the Act and the rules, notifications will be issued. Okay, so moving on to today's topic. First, we are going to discuss on notifications. So technically, if I have to tell you the number of notifications and number of circulars which has been issued in the last 1 month, it's literally huge, and it's not something new when it comes to GST. It's always there. Any random month you take, there will be a number of notifications and circulars. And this month is even more, probably because they wanted to celebrate the 5 years of GST this way. I don't know. Okay. Having told that today's coverage of notification will be from 9 to 17. So until 8/2022, it was issued within June. So we are going to predominantly discuss on the notifications issued in July and August. So starting with, so these are all the list of notifications. As I told you, we are going to go in the reverse order, which means I'll be starting from 9 and then we'll end with 17. Okay. So I told that, see, the notifications is something that we are going to discuss in detail. The reason being, circulars are always something very easy to read because it's given in a very layman's language. It's given in a very lucid language where anybody can read and understand. But notification is something, if you have to read and understand, you should have been knowing Act, rules, all the preceding notifications, everything should be known. Only then you'll be able to understand a particular notification. So our discussions will be more on the notifications. But if you cumulatively see the number of pages or which would have taken for these notifications and the circulars which we are going to discuss today, notifications will comprise of very minimal number of pages. Circulars, every single circular is almost for 10 pages plus. That's how it is being issued, right? So moving on to the first notification, 9/2022. Okay. So if we all know this, when the CGST Amendment Act 2018 came, it was actually it was made effective in 2019. So the Finance Bill 2021, right? So all the Finance Bill amendments in 2021 were all being implemented in 1st January 2022. So same way, whatever is there in the budget of 2022, we don't know when that is going to be made effective, right? So whatever we have seen in the recent budget, none of them have been implemented except for 2 amendments. Those are the 2 amendments which have been given in this notification 9/2022. Okay, couple of changes were already made effective through the finance bill itself. Okay, that also I will be touching upon. But only these 2 provisions have been implemented so far because it's so critical. And in fact, one of them is retrospective amendment, where there is a huge pressure from the industry to get it implemented immediately. What are those 2 provisions? One is section 110C of the Finance Act. Please remember, Finance Bill is different from Finance Act. See, what I can see is there is a mixed population. Okay, there are a lot of people who are there in the practice there, in this field for quite a long time. Many senior chartered accountants are there. Having said that, a lot of upcoming people are also there. So just to balance out, I may also be touching on certain basics as well to get the things right at a basic level. Okay. So during budget, you don't get the Finance Act. First of all, it's only Finance Bill. The Finance Bill has to be passed in both the Parliament to get it enacted as the Finance Act. Okay. So Finance Bill 2022 was given in February 2022. That's when the budget came. And then once it was presented and then it was passed in both the houses of parliament, effective 30th March 2022, it was enacted as Finance Act 2022. Okay. So the section reference what I'm giving here is 110C and 111 are the Finance Act section. Okay. Those two are made with the objective of amending 4910 of GST Act and 53 of GST Act. Okay. So what is this 4910? 4910 is basically to allow transfer of cash balance, only cash balance, not credit balance. Cash balance between distinct persons. What is distinct person? Multiple registrations under the same PAN. Okay, related party. Please remember, only distinct person. So let's say, for example, under the same PAN, the company is having one registration in Tamil Nadu, two registration in Karnataka. Quite possible within the same state, more registrations are also possible. Okay. So these three are what we call as distinct persons. Okay. So between the distinct persons, cash transfer can be made. Credit balance cannot be transferred. Okay. But again, when the cash transfer happens, please remember it can be transfer of any amount. Any amount can be transferred from whichever be the ledger in the cash ledger to only CGST or IGST at the receiving end. Okay, at the receiving end, it can be received only in the form of CGST or IGST. Okay, because they don't want to disturb already so many confusions with the state share of revenue. Okay, so they don't want to disturb that. Keep it simple. Any amount you can transfer because when you are at the transferring end, as long as you have a cash balance, the cash balance can be anyway interchangeably transferred, right? So once that is being that one that is going to be sent to a particular registration at the transferee's end, they are keeping it as a restriction. Okay. Now, having said that, the important condition for this is there should not be any liability in the electronic liability ledger. Okay, as per your electronic liability ledger, there should not be any liability pending. Typically, how your electronic liability ledger works is that whenever you are making your monthly returns and all that, it gets the debit credit happens. But apart from that, you also have this DRC01 whenever or the DRC07 that is being issued by the department. That is also going to take the color of liability in the electronic liability ledger. Okay, so which means if there is any DRC07 pending, then to that extent you cannot be making the transfer. To enable this particular section, additionally rules are also being made. Rule 8714. So that is also being additionally made in the notifications, and this can be transferred through PMT09. PMT09 is the same form which we can use to transfer within the same registration. Let's say from CGST to SGST, SGST to IGST, interest to penalty. However way we can transfer this. This was introduced way back in 2019. Okay. Now the same form is what we are going to use even for transfer between distinct persons. So the condition is that there should not be any liability pending at the transferor's end. Okay. So this is one particular amendment which has been made effective. The other amendment is very important amendment. This is an amendment with retrospective effect from 1st July 2017. Okay. I would probably say there are hardly very few retrospective amendments which are taxpayer friendly, and this is one such. Okay. So the amendment is that whenever input tax credit has been availed but not utilized and it has been reversed, then there is no interest. So interest is applicable only when ITC is being availed and utilized. Okay, so this sounds to be a very simple logic, but though it is logical, that's not how it was legally. So this has created a number of disputes, and there was actually one Patna High Court decision also. Okay, that was in favor of the taxpayer. They said, it's not sufficient as it's, what is availed should also have been utilized. And after following the Patna High Court decision, there were a lot of favorable decisions in many other high courts, including our Madras High Court as well. Okay, so everything was taxpayer friendly, and finally government also said, yes, even we don't have the intention to collect interest on this. we'll make suitable amendments for this. This was already given in the GST Council recommendations, and then it has been, the suitable changes have been made in the Act. Now, what is important here, as I told you, is retrospective amendment. And the second important feature in this is, what is the rate of interest? It is only 18%. Please forget, there is no more thing called as 24%. Okay. I know more than this issue, the rate of interest issue was literally faced by almost all the taxpayers. By default, you will receive notice or scrutiny from the department with 24% interest. Okay. There is nothing called as 24% interest, not only today. I'm saying from the day one, from 1st July 2017, there is nothing called as 24%, it is only 18%, even in the case where it is ITC availment and reversal. So, in fact, to put it more clear, this is how the law was originally also. But there is only a gap in understanding the law. Okay. If one has read the earlier provision, that is 50 subsection 3, it clearly states undue availment of ITC, okay, where it is only covering section 4210 and 4310. Section 42 and 43, first to begin with, it has never been implemented. What is section 42 and 43 is, in the case of excess availment of ITC, the officer has to, let me just elaborate how it was in 42 and 43, okay. The officer has to first send a form, that form is called MAS1 and MAS2. This has never come into the picture, okay. MAS1 and MAS2 has to be intimated to the supplier and the recipient. Then either one will come forward and then accept the liability. If both of them are not coming forward, then the liability is on the recipient to reverse the ITC. Even at that time, it's only 18%. Okay. The recipient has to reverse the ITC, and then after reversing, if the supplier is going to come forward and say no, it is only my mistake, then the recipient is eligible to reclaim that ITC. And after reclaiming, they come to know that no, the supplier has not paid the tax. Then they will insist on a reversal once again. Only at that time it is 24%. This has never happened to begin with. Okay, because 42 and 43 has never been made effective. MAS1, MAS2, all these have never been issued. Okay, if one has actually read this previously existing 50 subsection 3 properly, we can always come to a conclusion that irrespective of this amendment, retrospective amendment, there was never something called as 24%. It's always 18%. Yes. But now, when I was explaining the same thing, let's also read how the amended provision is. Where the ITC has been wrongly availed and utilized, the registered person shall pay interest on such ITC wrongly availed and utilized at such rate not exceeding 24% as may be notified by the government on the recommendation of the council, and interest is calculated. So the question here is, it's still 24%, right? If you read the act. So how then this 24 has become 18? Okay. If you see the act, it says not exceeding 24%, which means the act is still giving power for the CBIC to increase it to 24% at a later point of time, simply by amending the notification, and they don't need to amend the act. Okay. Now, though it is given as 24% as the ceiling limit in the act, if you read the notification for the rate of interest has not been specifically amended by way of another notification. It is directly amended through the Finance Act itself. If you read the Finance Act 2022, so this is just a summary. If you read the Finance Act 2022, there is something called as 6th schedule, which is there inside the Finance Act itself. That schedule is actually, giving this rate of interest change from 24% to 18%. And this particular provision is not implemented through GST notification. It is directly through the Finance Act itself. So if you read the Finance Act, at the beginning it says what are all the sections which is effective from the Finance Act itself, what are all the sections which will be enacted at a later point of time. Okay, so then what was already effective from 30th March 2022 was this, and there it contains a retrospective amendment. Okay, so this is what is the Finance Act section 116, which is effective 30th March. So wherein the rate change from 24% to 18% has been made with effect from 1st July 2017, as you can read it here. So this is what is the 6th schedule, which is there in the Finance Act. If you read here, it is for the figures 24, the figures 18 shall be substituted with effect from 1st July 2017. Okay, why am I explaining so much is because this I happened to receive as a query from a participant, where I was explaining it with some other, session. The problem what they were facing is, so even though this is so clear, the officer was still demanding 24%, saying yes, the law got amended, but you read that it is only saying 24%. Okay, so he was clueless. I understand the GST Council recommendation, everything says 18%. If you go back and read the section, it is still 24%. No, it's not to be read that way. Yes, sir.
Must probably be demanding for some other extraneous reason.
That is quite possible, sir. But anyway, just making certain things clear from the understanding level. Okay. So to go back, what are all the key things that one has to know when it comes to retrospective changes in interest? Point number 1, interest is only on net liability paid by way of cash and no more on the gross liability. Interest is not applicable when it comes to ITC availed but not utilized. Interest is always only 18%, including a scenario where it is the case of ITC availed and utilized. And as of date, there is nothing called as 24% starting from 1st July 2017 onwards as well. Okay. So there are two things which we have to know in this. Point number 1 is, though we say that interest is applicable only on the net liability paid by cash, it is a very limited scope provision. Okay, if you read that section 50 subsection 1, the way it was amended last year, it says only in a case where the liability is declared in the return under section 39, which is GSTR 3B, you should have declared the liability and the return should have been filed delayed manner. In that case, for the delay, you need to pay interest only on the cash component. So which means what happens if I fail to declare the liability itself and then I'm going to declare it in the next month? The plain understanding of the provision says you need to pay on gross liability. What if I'm going to pay through DRC 03? Still, it is only on, even if you pay the DRC 03 by way of credit, interest could be applicable on the entire component. The reason being, it is such a narrowed amendment in section 50 subsection 1. It is covering only one scenario, that is, you should have declared the liability in GSTR 3B and the 3B was filed in a delayed manner, then for the delay, you need to pay interest only on the cash component. Okay, so we have to be very careful on how we are going to calculate the interest. Okay, the next issue is, as I told you, it's only 18%. Yes, sir.
GST 3B return is filed belatedly, but there is no, the entire tax liability is getting covered through the ITC. In that case, there is
No interest at all. No interest. Yes, sir. So there is only late fees in that case. Okay. Next issue is, we have discussed that there is nothing called as 24%. It's only 18%. Yes. There are two situations where there could be excess interest paid. Right? So because somebody might have understood it, the interest has to be paid on gross basis, because this clarification came up only in December 2018. Okay, that is when the in-principle approval was given for net cash liability basis, interest has to be calculated. So some might have already paid it, right? So what happens to them? Second scenario is ITC availment and reversal. So in that case, many might have paid it at 24%, either because it is demanded by the department, or some might be over-conscious, I don't want to invite any kind of trouble, let me pay it at 24%. So all these might have happened. So what happens to these kind of excess interest? Can we take refund of this? Can we claim refund of this? Okay. There is nothing which has been clarified to say that yes, refund can be taken. Okay. But a plain understanding is definitely yes, refund can be taken. Now, how this refund can be taken? What are all the supporting facts to say that this refund can be taken? Point number 1 is that, see, if you read the way in which certain retrospective amendments have come in this budget, There are two more amendments like, alcohol liquor for the license for alcohol liquor, where the exemption has been given. Same way for the, the waste sale out of the fish meal processing. Okay, there also they have given exemption with retrospective effect from 1st July. If you read those two amendments, which is there in the Finance Act, along with the amendment, they have also inserted one clause, wherever the tax has been paid already, refund shall not be entertained. There is no such similar clause when it comes to this amendment. Point number 1. Point number 2, if you read section 54, which is the only governing section for refund, that 54 says refund of tax and interest. So that can be a narrowed interpretation that can I read it as tax and interest. So interest should always be accompanied with the tax, or is it tax or interest? So there are a lot of decisions to say that though it is tax and interest, it can always be understood as refund of tax and refund of interest. Now moving forward, there can be one more issue when this refund is attempted to be claimed, is that the time when you paid the refund, okay, the explanation to section 54, there is a time limit for refund from the relevant date within 2 years. The relevant date is the date on which the excess tax has been paid, the excess amount has been paid. So what if I have already crossed the 2 years? I might have paid this excess in 2017-18. So here again, the important point is, if you read a very recent judgment on the ocean freight matter, on Cosmol Energy, that's a Gujarat High Court decision. So what the decision says is that, see, when you have collected the amount which is not at all, for which there is no levy at all, it is not even a tax to begin with. It's just an excess amount, right? Same way, exactly. So this is not at all an interest. If you have paid an excess interest, which means it is collected without jurisdiction, right? Without an authority to collect a tax, which means it is not at all a tax. It is not at all an interest. It is just an excess amount paid. There you cannot apply section 54 2 years limitation. What is applicable is the limitation law. If you read limitation law section 17 subsection 1, for all the government related mistakes, for any kind of amount which is being paid because of these mistakes, the time period starts only when the mistake is known. When you will know the mistake? Only after the amendment has come. So from this time only the time period starts, and again that time period is governed by the Limitation Act and not by the section 54. Okay. So actually, in fact, there is one article also which I have written on these lines in our CA Institute journal in September 2021. That is when the amendment had come relating to the gross tax liability interest or net tax liability interest. Okay. So September 2021, there is an article which I have written. You can refer for these case decisions if at all you need to in future. So moving on, I have broadly covered everything relating to interest. So this is what is the amendment that I was referring to. We can see this in the budget, okay, in the finance bill. You can find that for this fish meal and all that, the one which I have highlighted in red, no refund shall be made of all such tax which has been collected, but which would not have been so collected. So similar provision is not there when it comes to interest. So that makes it all the more clear that there is no restriction to apply for a refund. So moving on. The next notification 11 and 12, 10 I will come to it. So 11 and 12, both these are on composition scheme. So for the composition scheme, time limit has been extended for CMP 08, which is quarterly filing. From June, they extended it to from July 18th, they extended it up to 31st July, which anyway is irrelevant as of now. Same way for GSTR4 also, that is the annual filing for the composition scheme dealer. It got extended up to 28th July. That is the late fee has been waived off until 28th July. So the next notification 10/2022. So as we all know, this annual return GSTR 9 is applicable only for taxpayers who has turnover above aggregate turnover above 2 crore. Okay, this is not there in the act. Every year they are giving a notification to say that above 2 crore only you have to pay, less than 2 crore it's not mandatory. Okay. Now the next amendment is notification 13/2022. I'm probably pushing it a little fast because we are very much late, right? The time when we started the session itself. But if anybody wants me to slow down, yes, we can do it. So notification 13/2022, the next notification, abandon the time limit for issuance of a show cause notice, basically to start an assessment for 17-18 has been extended up to 30th September 2023. So until next year September, anytime you can receive show cause notice. Don't even think of whether the time limit is there or not. Okay, again as I told you, this is only for 73 show cause notice. For 74, anyway, even more time is there. For fraud cases, is that?
Beyond 5 years.
Yes, absolutely. In fact, if you see, originally also, this is not something that is happening now. Let me tell you, the assessment time limit is not based on the year. It is calculated based on the last day of filing annual return. So we all are very happy with getting the annual return due date extension. But this always has a repercussion when it comes to the assessment time limit also. That's what I have a chart here. So if you see for 17-18, originally the time limit was in December 2018, correct? But by December 2018, GSTR form itself was not available. Okay, so only in 2019 we had the form. Finally, when did we complete? What was the last due date after the extensions and extensions and extensions? The last due date was February 2020. Correct? For Tamil Nadu, I think it's 5th February, and for certain states it's 7th February. Okay. So if you see here, from then you have to calculate the time limit. In the case of section 73, which is non-fraud cases, 74 is for fraud cases. Okay. For 73, 3 years is the time limit within which the order should have been passed. At least 3 months before that, show cause notice should have been issued. So which means for 17-18, the time limit available anyway for issuance of show cause notice was until November 2022. That is what now they have extended up to September 2023. Okay. If you see for the fraud cases, section 74, August 2024. Trust me, already all the show cause notice are only issued under 74. Nobody is issuing under 73 for that matter. It is always issued only under 74. Not because of the time limit, it's also because of the penalty provision. Because if the show cause notice is issued under 73, there is no penalty if the tax is paid immediately. But if it is issued under 74, there is a minimal penalty even if the tax liability is accepted and paid. Okay. See, you can always contest to say why 74. You should have issued under 73. I don't have fraudulent intention. All these things. There are certain things which can be handled in a litigative way. There are certain things which the company may not be interested to take it for litigation. Right. See, being in practice, we need to balance out where we have to look into things from a compliance mode and where we need to look into things from a litigation mode. It is easy to say that everything can be taken up for litigation, everything can go to Supreme Court and High Court. But we have to see practically how far it is feasible for everyone to go and wait. Right? Most of the companies, they don't want to take up the matters for litigation unless the quantum is really big and they find a big probability of winning. Right? People want to, make sure that the compliances are better. And again, when it comes to compliances and certain small issues, they want to handle it out and then close it rather than taking things up to the court. Right? So from those lines, if you see, section 74 is the section under which most of the show cause notices are being issued. Right? So if you see, the time limit is only getting extended. The same impact is there even when it comes to retention of accounts. So though it is only 6 years, technically it is only 6 years, 72 months, that is what is being prescribed. But if you see, the 6 years is already up to, it has exceeded 10 years. That's because 4 years is the time limit we had for annual return filing. Okay, so we have to be careful next time before expecting any kind of annual return extension. So, coming back, the point what I was trying to say here is that the time limit is now being extended up to 30th September 2023. As of now, whatever show cause notice that comes for the next 1 year also keep getting. Don't even worry about the time limit. They all have, absolutely good time limit. Okay. The second thing, which is a double-edged sword, okay, when it comes to refund. When it comes to refund, this is one big relief is that for the calculation of this 2 years time limitation for refund, the entire 2 years of COVID period has been removed. So starting from March 2020 to February 2022, the entire period has been removed. This is actually a very big relief. Okay, because many people might have missed applying for refund, not just because of COVID, because for some other reason also. Still they get the benefit. Okay. The second, as I told you, it's a double-edged sword. What happens here is from the taxpayer's perspective, you get 2 years of relief. From the officer's perspective, also the same period is being lifted from him to pass an order for erroneous refund claims. Okay, so to put it simple, today we are in August 2022. So technically I can claim refunds only starting from August 2020, not before that. But because of this particular waiver, I can claim even up to August 2018. Right? So literally I have a huge period. Last 4 years I can claim the refund. Because the 2 years are already vanished. It's like Attipattu Grama vandu India varaipadathilirundhu kaanama pona madri. The 2 years has completely vanished from the refund picture. But the same thing is that when it comes to the officer, they have to pass the assessment, 3 years time limit, which we saw in section 73. The 3 years is from the date of order when it comes to erroneous refund related orders. But there, again, the 3 years limitation does not include this 2 years of COVID period. So which means last 5 years, whatever order has been passed, any order they can look back now and they can pass an order for erroneous refund, which has actually happened. Okay, we have been handling a lot of refund cases. Okay, and last few years we have certain clients for whom we have been handling refunds. So early years they have applied with excess lot of errors. So all those erroneous refund orders we are getting now. The problem is they have to pay it with interest, 18%. 18% for 5 years is equivalent amount already, almost. Right? So that is the serious consequence of this provision. So this we have discussed. Now the next notification is auto revocation of suspension. So first they have introduced cancellation. Then they said before cancellation we'll do one suspension. Now they said the suspension has to be manually revoked. So better we'll give you auto revocation. This is actually a good provision because of 2 reasons. One is that when it is under suspension and even when the returns are being filed, again you need to go back and knock the doors of the officer, which is not required now because once all the returns are filed till date, when the registration is cancelled, then you cannot even file the return. It's closed. But when it is under suspension, you can still file the return and revocate. Right? Now the betterment is that once you have filed all the returns, then it will automatically get revoked. That is the additional feature that has been enabled now. So the next amendment is again another very taxpayer friendly amendment, especially for exporters. Okay, so for all the exporters they have the duty script, right? Yes sir.
You said that if the registration is suspended and all the liabilities are paid, then automatically it will be.
Not about liability payment, it's about filing the returns. See, when the registration will get suspended, it is in scenario, there are multiple scenarios. Okay. But there are 2 major provisions for which it will get suspended. In the case of composition scheme dealer, if the return is not filed for 3 consecutive periods. For any other regular taxpayer, return is not filed for 6 months. Then it will get automatically suspended after show cause notice. Okay. So after show cause notice, once the show cause notice date is over, then it will get suspended. Okay. Now the thing is, after the suspension has happened, if you are filing all your returns, the 6 months returns which was due, plus probably by then you would have landed in 7th month or 8th month, right? So if you are filing all these returns, then automatically your registration will get revoked, will get revived as it.
But I think once it is suspended, you cannot log into the portal. And
You can log in, sir. While it is suspended, you can do it. Only if it is cancelled, you cannot do it. So The next amendment is on duty script. As I told you, for exporters, they all have this duty script, which previously it was MEIS, for services it was SCIS, now everything is made into RDTP. So these scripts, how they receive is this, there is a formula, the rate will differ, product wise the rate will differ. On the FOB value, X percentage will be the value for which the script will be received. And the script they can utilize for the purpose of customs duty payment when they are importing. If an exporter is not able to pay the customs duty because he is not importing, he will sell the script to an importer. The importer will purchase the script and he will utilize it for the, it's actually a big market by itself. Okay. So the importer will purchase the script and he can use it for his customs duty payment. The script is transferable. Now when the transfer happens, when this sale of script happens, initially it was taxed. When the law was introduced in July 2017, it was taxed at 12%. Then after all representations, it was made into 5%. In October itself, October 17 itself. Then again in November 2017, it was exempted. The purpose of exemption is very simple. See, the script is a benefit which you are giving for the exporter for him to bring forex money. And then you tax on the script. Doesn't make sense. Right? So that's why it was being exempted. Then the confusion arises, if it is exempted, should I reverse the credit proportionately? Yes. So this was the next confusion.
Common inputs have to be.
Sir, this is again, the issue here is, first of all, should I reverse the credit? Because again, it's a benefit that I'm getting. It is a benefit what I'm getting because of the FTP benefit as an export incentive. So again, expecting me to reverse a proportionate ITC on this is unfair. But on top of this, the issue what was happening by and large, because we have handled many such cases, the issue here is, even if I say that the script proportionate credit has to be reversed under 42-43, it should be only for the common credit. Now what we say as common credit is what is common for the company. So whatever is relating to export, it is fully eligible. Whatever is relating to taxable domestic supply is also fully eligible. Whatever is relating to exempted is fully reversible. And what is common credit, that only we have to reverse it proportionately. But the problem here is department will have a totally different demand. What they say is that whatever you spend for your export purpose is common for your export as well as for your script, because the script itself is received because of export. They take a different argument. Then what happens? Your entire credit takes the color of, let's assume it's a 100% export company. The entire credit, it takes the color of common credit. So even if the script is say, 2-3%, so 2-3% of the ITC has to be reversed, which is still a big amount. If you look at for large scale exporters where they have almost like 10 to 15 or let's say even 100 crore of credit in a year, then it's actually a very big hit. So this issue was prevailing. Now it's a big relief that they have given that Rule 42-43, just like how you don't include this, fixed deposit interest for the purpose of calculation, don't consider this exempted turnover out of duty script sale. That need not be considered. But again, the issue is not fully settled. It is still open because this is given as a prospective amendment. Okay, so what happens to the past is still, something open. But at least there is a clarity when it comes to the future. Maybe one expectation could be at least the department could take a liberal view in identifying only common credit and making proportionate reversal, because anyway the intention of reversing itself is not there for the government. So just because there is a technical provision, they need not, take the whole credit as a common credit.
The purpose of turnover calculation, this may not be included.
Yes. In fact, that is also not clear. If you see it that way, Rule 42-43 is not very clear. It only says for exempted, you don't need to include the fixed deposit interest and this. It is not very clearly mentioned for the turnover. But if you read certain other provisions, okay, like for example, there is one provision 89.4C in Rule 89.4C for export refund application. There it says the export turnover what you are considering for the calculation should be 1.5 times that of the domestic and it cannot exceed that. Okay, so the export should not be more than 1.5 times that of domestic. If it is more than that, you have to restrict it to 1.5 times. There is a circular which has been given for this. It says when in the numerator the export definition changes, then the denominator which contains the total turnover, there also the export component should be this component only. Okay, it's a completely different provision what I am talking about, but you can apply the logics. Logically, in some other provision, there is a clarification, there is a circular which says that if the numerator is restricted to 1.5 times, then the denominator also, the export component should be the same as numerator. You should not take the actual in the denominator. So drawing reference from a different circular in a different context, you can always apply this for this rule 42 also. So the next amendment in notification 14. See, notification 14 is the only, big amendment, I would say. Other things are small provisions. Taxpayers exempted from generating e-invoice shall make a specific declaration in the invoice indicating such kind of specific exclusion. So the point here is, I am a taxpayer and I have already exceeded the e-invoice limit. As we stand today, it's 20 crore limit. Okay. So because I have crossed that 20 crore threshold, e-invoice is applicable for me. But the particular transaction is exempted from e-invoice. The reason is because, see, the aggregate turnover details are available with the department officers. So what happens is the officers are basically, whenever the goods are moving, they will be able to check. They can stop and check whether the e-invoice, e-label, everything is available or not. Correct. So when they are going to make this check, as a public data, it is available for them on the aggregate turnover for each year. The moment you're going to give them the GST registration number, the system will tell them whether the person has crossed the 20 crore limit or not, whether e-invoice is applicable for him or not. Okay. Now, the e-invoice is applicable for him because it has crossed 20 crore. But for the transaction, it is not applicable. Okay. So to make this more clear, the particular declaration has been specified in this notification, wherein they are going to say that I or we hereby declare that though our aggregate turnover in any preceding financial year from 17-18 is more than aggregate turnover specified, which is currently 20 crore, we are not required to prepare an invoice in terms of provisions of the said rule, that is the e-invoice. Okay. Now, what are those exceptions? So, if you see, as an entity, there are certain entities which are exempted from preparing the e-invoice. To be specific, insurance, banking, financial institution, NBFC, GTA, and then supplier of passenger transportation services, and then person supplying services by way of admission to exhibition of basically the theaters, right? Cinematographic film in multiplex screen. Okay, theaters, and then SC is a unit that has been subsequently added, and government departments or local authorities. These set of entities, even if they cross the 20 crore threshold limit, for them e-invoice is not applicable. The second category of exemption is, as a document, e-invoice is applicable only if it is invoice or debit note or credit note, only for these three type of document. So where it is not applicable, bill of supply. Bill of supply is, if it is by the composition scheme dealer, bill of supply, and if it is exempted sale, then it is bill of supply. Okay. So self-invoice, which means even if it is an entity for whom the e-invoice is applicable and they have sold, they have exceeded the 20 crore limit, still if the supply is an exempted supply, then tax invoice will not be issued, only bill of supply will be issued, for which e-invoice is not required. Self-invoice for RCM, advance payment, delivery challan, financial debit note or credit note, not the tax debit note, credit note, financial debit note or credit note. For these instances, e-invoice is not mandatory. Then transactional exemption is B2C transaction. Okay, even though I have exceeded 20 crore, still if the transaction is a B2C transaction, only for B2B e-invoice is applicable. For B2C, it is QR code. Again, that's only if the turnover exceeds the 500 crore limit. So B2C transaction, non-GST supply, that is alcohol, liquor or petrol, diesel, bill of entry in the case of import, and nil-rated or exempted supply. So for all these cases, e-invoice is not applicable even if the taxpayer has exceeded the 20 crore threshold. Okay. But the important point here is this 20 crore limit should be calculated for any preceding year, financial year, starting from 17-18. You don't need to consider current year. Until last year, it was within 20 crore. Current year, I have made 100 crore, doesn't matter. Only next year your invoice is applicable. Because it is based on previous year aggregate turnover. For any of the preceding, I have a client for whom now they have almost closed their business. It's a very small, weaker business what they are doing. But in 17-18, they were doing really good. It exceeded 20 crore. So they still have to make the invoice now. Okay, because it's based on any preceding financial year starting from 17-18. So the next amendment, delivery challan is DC what you prepare for your job work. For delivery challan, you don't need to make the e-invoice. It is exempted. So in all these cases, you have to give this declaration. That is the point. So which means, for example, goods sent for job work, for which you will prepare the delivery challan. But the delivery challan will not be accommodated with the e-invoice. So you need to give a declaration. The declaration have to be given stating that the e-invoice is not applicable. So the next amendment is again on refund, where if erroneous refund has been sanctioned and then the refund is repaid. So the officer is sanctioning refund, then they are finding that it is erroneous refund. It can be in any of the two cases, with payment of duty for export, or it can be section 54 subsection 3. Basically, it means in the case of accumulated ITC due to export, accumulated ITC refund due to SEZ supply, accumulated ITC in the case of inverted duty structure, and export with payment of duty. Any of these four type of refund, if the refund is erroneously sanctioned, and then the officer is going to find out that, or the person is finding it on their own self, right? So whether it is identified by the officer or if it is self-identified, in both the case, if the erroneous refund has been repaid with interest and penalty, then whatever was the credit, that has to be recredited. See, first the credit will be availed. It gets credited to the electronic credit ledger. Then at the time of submitting the refund application, you are debiting the ECL. The electronic credit ledger gets debited at that time. That's how the refund is being applied. And then you are going to get it by way of bank. So what was originally in your invoice, that is going to come as a credit, the credit is getting converted as a cash in your bank account. Now from your bank account, you again repay it back to the government. So logically, the again credit has to come back to you. Correct? It sounds like a simple logic. What was in the credit is converted into cash by getting the refund. So now when you say the refund is wrong, you give me back, then again the credit should come back, no? So it sounds very simple and logical, but probably the logic is not appreciated by the officers. That is the problem here. So just to give you the background of this, there is one decision in high-tech Plast India. This was a very recent Gujarat High Court decision in April 2022. So this is the decision. So I'll just read out the second para of it. That these are the court wordings. Okay, High Court wordings. Here, the simple issue is one of restoration of ITC, which was erroneously refunded and subsequently recovered. If the authorities have accepted that there was an error and resultantly accepted repayment of the erroneous refund as a corollary, the credit of the ITC must be restored. It cannot be that for the purpose of repayment there was an error and for the purpose of restoration of the ITC there was no error. There is no question of any refund of the ITC at all. This is not a case of refund of ITC. The question is one of restoration of the ITC in the electronic credit ledger and not a refund thereof. Hence, any reference to 9610 is completely misconceived and not tenable. This is exactly the wordings of the Gujarat High Court decision. So, post this decision, we realized the need to give this particular amendment. So that's when they have introduced this 86(4)(a) rule, wherein it is clearly specified that where a registered person deposits the amount of erroneous refund sanction to him for section 54(3) or 96(3), along with interest and penalty wherever applicable, through cash in form GST DRC 03 on his own or on being pointed out, an amount equivalent to the amount of erroneous refund deposited by the registered person shall be recredited to the electronic credit ledger through form PMT 03A. Okay, so this sounds to be simple, logical, understanding, but because of the way it is not being clearly understood or appreciated by many of the clear notification has also been now provided. And there is also how this has to be claimed, that is also clearly given in a circular that we'll be discussing shortly. So the next amendment is Rule 87. This is what we discussed some time ago. So as an extension to it, first thing is that cash deposit can be made through UPI or IMPS. I don't know when they are going to introduce credit card in this. Okay, hopefully not. So UPI and IMPS option is also not available, but then this is still not available in the portal. Okay, whatever said, see, I told you, right? It starts with the constitution and then the act and the rule. So there is something beyond all this, which is the GST portal. Ultimate deciding authority is the portal. Whatever the law is, ultimately you can do something only when it is there in the portal. Okay. So though this particular rule has been implemented, still till date also it is not being available in the GSTR 3D. So the next one is in the case of this transfer between distinct persons. Yes, sir.
Earlier amendment, you said regarding the erroneous refund, it is a prospective one or it is retrospective?
It is retrospective. See, the rule is prospective, wherein they have introduced this form. But the applicability of the law can always be retrospective because it is just an understanding of how things are. Probably they are trying to give it in a clear way that this particular form and this is how you need to apply and get it.
It is more in the form of a clarification.
I wouldn't say it's in the clarificatory nature. They are trying to give a proper prescribed procedure for this. Unless the rule is not being prescribed, unless a particular rule is not being prescribed, still they can claim this credit back, but the mechanism of claiming will not be clear. So the next one is, as we discussed, the transfer to distinct person to CGST or IGST, for which this PMT 09 so what we discussed at that time was the Act amendment, which was notified. This is rule amendment. So the next amendment is on 88B. So manner of calculating interest. So already we discussed about interest, that is 24%, 18%, all these things. So what did I tell you? Interest has to be calculated only when the ITC is availed and utilized. Okay, not when it is availed. But how do you determine the utilization? It sounds simple, but you have to understand that it is not very straightforward. If any of you have actually done the utilization interest calculation, you will know how difficult it is. But now they have prescribed a procedure. Okay. See, let's say for example, the utilization amount is 5 lakh, or rather the availment amount is 5 lakh. Okay. At that point of time, I had 5 lakh. Now also I have 5 lakh. So does it mean I have never availed it? In between somewhere I would have made the availment. Correct. So in between somewhere it would have fallen. Correct. So sometimes what we do is that it falls down to 2 lakhs. Then I will calculate for the 3 lakhs as utilization. Again someday it comes back to 6 lakhs. I'll stop the calculation. It doesn't work that way. So the rule is now clearly being prescribed. They have defined what it means for amount utilized. What does it mean when we say extent of utilization? What does it mean when we say what is the date of utilization? So first thing, it is clear, from the date of utilization till the date of repayment, interest has to be calculated. So which means if it falls down, again it increases, doesn't mean you can stop calculating the interest. The moment it falls down, it has been utilized. So till the time you are making the actual repayment of this excess ITC, you have to calculate the interest. Okay. Now again, the important point in the date of utilization is, let us say 20th April is the due date, correct, for March month return filing. So that is when the utilization has actually happened. So that is when the utilization has happened. In March month, while filing March month return, I have exhausted this 5 lakhs. Until then, I had this 5 lakhs balance. But in March month, it has vanished. But this March month return, which I am supposed to file in April 20th, I filed only on 10th May. That is a delayed filing. Okay. So technically, when I have utilized the money, 10th May. 10th May is when it got debited in the electronic credit ledger. You cannot calculate it from 10th May. You should calculate it from 20th April. Reason being, had the return been filed on timely basis, you would have utilized it on 20th April. So start calculating whenever the utilization has happened by way of filing a return, then the date of utilization is the date of actual filing of the return or the due date, whichever is earlier. So which means 20th return you filed on 15th. Start calculating from 15th. Because 15th is when you have made the utilization. Okay. So whichever is earlier. If it is not in the form of return filing, a normal debit you have, basically through DRC03 or something you have debited, then the actual date of debit from which you can calculate the interest. So the next one is on rule 89. They're actually still in rule. Okay. So what was supposed to be 1.5 hours of session, almost 1 hour is over because we started only by 4 o'clock. Okay, let me see how quickly we can complete this. So rule 89, the next amendment is where SEZ, it can be SEZ officer or the authorized officer. The next one is for electricity export. Okay, for electricity export, now they have given the electricity export is also now being part of the export. Basically, however way the export refund can be applied for export of goods or export of services, electricity also can be paid. Electricity is goods, not services. Okay, electricity is goods and refund can be claimed. So to enable that, because it's not a straightforward goods, right? How do you know what is the actual electricity that is being transmitted during the year? So a lot of things are there. Okay, it is not like any other goods where it crosses through the customs. You have the EGM, so all these are not available. So there is a specific clarification also. A circular is also given how it has to be done. If time permits, we will cover that circular also. Okay, so statement 3B has been given, and the important point in the case of this electricity refund is that though it is refund in the case of export, while applying in this RFD 01 online, you should not claim it under regular export refund category. It should be claimed under any other category because the format cannot be filled up. It has to be under any other. There is a specific category for this. Okay. The next one is explanation to rule 89.4. That export with payment under LUT value. See, this is another disputed matter. Okay, if I have to give you the origin, there was one circular 37, way back in 15th March 2018, it was being issued. Okay, so the circular clarified on one thing: when it comes to export refund, the value should be taken based on the invoice value or shipping bill value, whichever is lower. This is what the circular says. The same point was repeated in circular 125 also. Okay. But the way we all can understand this, you take both, compare apple with apple, orange with orange. Which means you compare whatever is the value as per shipping bill. Let's assume if the shipment terms is CIF. Compare CIF value between the two. Whichever is lower, you take. If it is in the case of DDP, compare DDP value in both, claim whichever is lower. This is how the understanding of even if you read the circular. Okay. But the problem here is, as per the C&AG audit report, they have given a specific instruction to the department that You have taken CAF value, you have taken DDP value, you have taken CFR value. How can you take all these things? You should take only FOB value. For this only we have the circular was already given. You have to take whichever is lower. So department officers started taking whichever is lower. So when I take whichever is lower, what is the invoice value or the FOB value as per shipping bill, whichever is lower was being considered. Okay, but this is actually in line with the export incentive FTP policy of the government. As per the export incentive policy of the government wants to incentivize any exporter only based on FOB, because ultimately FOB is like a benchmark. That is when the goods are delivered, that is crossing the Indian Indian frontier, right? So after that, whether you charge CIF or you charge GDP is all based on how your terms is with the party. So if I have to be, if I have to be equally justifiable for all the exporters, I have to give any incentive only through FOB. I cannot be giving for one person at FOB, another person at CIF value. So this is the policy of government when it comes to export incentives and FTP. So keeping in line with this, now the amendment has also come. So which means as per the amendment, as we stand now, value of exported goods can be either FOB value as per shipping bill or value declared in the tax invoice, whichever is lower. Now from now onwards, you cannot have the export value which is beyond the FOB value, even though your terms of shipment could be whatever it is. Having told that, remember the circular which I told you already, what is there in the numerator should be there in the denominator. So when you are taking the adjusted total turnover for the denominator also, the export value should be restricted to the FOB value. It cannot be like numerator is FOB and denominator is at CAF. It has to be uniform. So the next one is on inverted duty structure. There is a formula change. Okay, this is a very famous judgment in the case of VKC footwear. Okay, so VKC footwear, what has happened is Gujarat High Court gave a favorable decision, and then it was a adverse decision when it was in the Supreme Court. Okay, the issue is very simple. The issue is that for inverted duty structure, refund can be claimed only for input and not for input services and capital goods. The issue was that input services also you should be giving me. You should not be restricting, because first thing is that the Act says only input. The rule is only prescribing input services. Okay. Now, how can it be any different? The Gujarat High Court decision was favorable for the VKC, and by the time the matter was in the Supreme Court, already this industry was removed. If you remember, January 2022 amendment. Okay, January 2022, there was a lot of rate amendment. Leather industry, footwear also, they have increased the rate to 18%. Simple, because they wanted to remove them from inverted duty structure. Okay, so you want to protest for this, first of all, I will remove you from this whole structure itself. That was the decision. So having told that, the issue was still continuing. Okay, though it was not a favorable decision at the Supreme Court level, Supreme Court, after the final verdict, it also told a specific point that, see, legally the department has won the matter, but you still have a responsibility to go back and check your formula. There is something definitely wrong in the way in which your formula is. The GST Council should consider, go back and revisit your formula. Okay, I will tell you how the formula was and how the formula is now changed. That will give you an understanding of how unfair things were. Okay, the old formula, if you see, ITC is proportionate to the inverted turnover by adjusted turnover. Okay, take the proportionate ITC. From that, you subtract the tax payable on inverted duty structure. Okay, what is, it's nothing but accumulated ITC. Correct. You have an inverted duty structure, which means your purchase rate, the purchase of input has higher rate as compared to sale of sales rate. Correct. So basically it is nothing but accumulation of ITC over and above the tax payable. So ITC minus tax payable. When it comes to ITC, you take the proportionate ITC. From that, you subtract the tax payable. This was the previous formula. Now you see the new formula, same ITC, but tax payable. When you say ITC can be only on input, you cannot take it on input services and capital goods. Correct? So the tax payable also you should give the same proportion, right? Net ITC divided by ITC availed on input and input services. So when you say that ITC you can consider only on input, then the tax payable also should be taken proportionately, because whatever tax that I am paying, I need to meet the tax payment out of my input as well as out of my input services. So I should be allowed a proportion there also. Okay. So this is how the formula got changed. I have also demonstrated with an example. I am not taking through the complete example, but as you can see, this is the old formula. Okay, so this is the illustration what I have. Okay, so if you see here, the total turnover is 40 lakhs. This is the tax payable, and if you see the ITC is ITC input services and capital goods. Okay, so with this formula, with this example, if I'm going to apply it on the old formula, I get a negative refund amount, which means it is 0. For the same number, same example, I'm going to apply it on the new formula, I get 54,000 refund. So the reason here in this case is very simple. The extent will differ based on this proportion.
Only capital goods is excluded.
No, it's not. Capital goods is anyway removed, sir. The dispute is not at all about the capital goods, because capital goods was never allowed even for export SEZ also. Okay. So if you see here in this case, but to what extent this is beneficial is based on to what extent is your input services. For some industry, for some taxpayer, if their input services is anyway not a big amount, for them this will not create a magical impact. But if you have a huge input services, then the formula difference will create a big impact. Because if you see here the proportion, instead of taking previously you have subtracted the entire 1.5 lakhs. Now you are subtracting only 50% of the 1.5 lakhs. But whether your proportion is 50% or what is the proportion, let's assume if they don't even have input services, they have only input, then what will happen? It's 1.95 lakhs divided by 1.95 lakhs. So the subtracted value remains the same 1.5 lakhs. They don't get any benefit. It will be more beneficial for those who have input services also. So the next notification is Rule 95A, basically for the duty-free shop. Okay, duty-free shop earlier they were giving us, a separate refund was being allowed. Now there is no special treatment. Duty-free shop is as good as any other exporter. So whatever is sold in the duty-free shop, which is in the international airport, that is being taken out of India, so that is considered by default as exporter. Okay, so consequent to it, the related rules, circulars, everything is being withdrawn or omitted. So the next one is Rule 96, where for pending, refund claims, that is in the case of export with payment of duty, it is auto transmission. Right, everything is automatic transmission from the GST portal, between the GST portal and the ICE gate. Correct. But for some reasons, some of those exports, some of those refunds were not being automatically processed. The reason could be because they are categorized as risky exporters, or for some or other reasons, these kind of exports are pending refund. Now, what benefit? This is actually a big benefit for the exporters. What they have told is that now these kind of refunds which are not processed through the auto transmission automatically gets converted into RFD01 manual application of refund. You don't need to make a separate application. System generated RFD01 that will be directly communicated to the officer as well as to the taxpayer. The taxpayer need not once again make another application. Okay. So if there is a point where because them being risky exporter, or because the the customs officer is not approving this, or because for any other reason, basically because of certain risk parameters or data analytics, the officer is actually putting this on hold. For any of the reasons, if the auto refund is not being processed, see, this was actually a very big relief. If you are dealing with any of the exporters who are into this field, because since everything on one side it is automatic, so you get the money easily. But on the other hand, it is so much automatic that the moment it is struck, you don't know where to go and knock the door. Because you ask the GST officer, he will say it is customs process. The customs officer will say, I don't know anything, everything is automated. Correct. Nobody is held answerable for the when the refund is not being processed. because nobody is actually performing the task. It is all automated. So now when it is on hold, it is withheld for these reasons, it automatically gets converted into RFP01. Then it is RFP01 which is submitted to the jurisdictional officer of GST. Then it is on him to scrutinize and sanction the refund. So next one is the amendment in 3B. This is already there in this month 3B also if you are going to file. For this e-commerce operator, I am not elaborating on this because we are already running too much out of time. But if you know, for certain e-commerce operators, okay, there are 4 categories of e-commerce operator. There is transportation of passenger services like Ola, Uber, and then this OYO kind of accommodation services, housekeeping services like Urban Club, and then Zomato, Swiggy. These 4 categories. Doesn't matter whether the actual service provider is registered or unregistered. The responsibility of paying tax is shifted completely on the e-commerce operator. For example, Swiggy, Zomato, from this 1st January. So the restaurant, even if they are registered also, they need not pay the tax. Who has to pay the tax is only this Swiggy or Zomato. They'll have to pay that 5% tax. Okay. So now the tax liability itself is being shifted. Accordingly, 3B is also being amended suitably. In 3B now you will find 2 fields. So you need not fill up these details anywhere else. The first field is to be furnished by the e-commerce operator. That is, even though it is not their turnover. What is their turnover? It is only their commission. Correct. For the Swiggy, my income is not the entire sales. It is only my commission. But tax I need to pay on the entire, sale value. Correct. So I cannot declare it in the turnover because my turnover is only my commission. Correct. But I need to declare this. Where do I declare it? There is no such provision. For that, it has been created. So to cross verify this from the registered, supplier perspective, he has a turnover, but there is no tax because I don't need to pay the tax. E-commerce operator has to pay the tax. So how do I declare it? It is not exempted. It is taxable, but I need not pay the tax. There is no such provision in 3B. So that's why these 2 provisions has been enabled. So first one is to be filed by the e-commerce operator. The second one is to be filed by the supplier who is making it through e-commerce operator. Again, I repeat, this is not for all e-commerce operators. This is not for if you are dealing with Amazon. Okay, it is not for all e-commerce operators. It is only in the case of 9-5, where the tax liability will be paid only these 4 categories. I am giving this as example. Okay, don't take it literally. These are examples. These 4 category of services, if the tax is paid by the e-commerce operator, then the declaration has to be given like that in 3B. So this is what the actual 3B screenshot you can see. These 2 has been already enabled in the portal. So next amendment, as we all know, HSN is already being made mandatory with effect from 1st April 2021. Keeping in line with it, in your current year annual return, GSTR 9, HSN is mandatory. All these while we enjoyed the benefit of keeping it optional, correct? I'm sure none of us would have filed this particular field because it's optional. So this year it's going to be mandatory because already it is mandatory in GSTR 1. So now it's mandatory in GSTR 9 also. The HSN details has to be filed for outward, but for inward it continues to be optional. Okay. All other optional fields of GSTR 9 are continuing. This is one where it is being made mandatory now. So the other one probably, let us skip this because we don't have time. Because for fly ash bricks and other things, that 90% criteria is now completely removed. Earlier, this 90% criteria was there. Okay, that is applicable only for fly ash aggregate. That is removed now. Now, the important point here is they are not eligible for the composition scheme benefit. And again, for them, the threshold limit is not 40 lakhs; it is only 20 lakhs for GST registration. Okay. So the next one is e-invoice. So e-invoice, when we started, it was for 500 crore in 1st October 2020. Now it is in 10 crore with effect from 1st October 2022. It is going to be 10 crore. Currently, it is at 20 crore. With effect from this 1st October, it is going to be 10 crore. Probably we can expect, from 1st January 5 crore. Okay. At the next level, probably because 5 crore, they always come to that 5 crore level, no? Annual return, everywhere that 5 crore limit is there. So I don't think they will jump directly to, completely mandatory. Maybe it will come to 5 crore by this 1st January. Yeah, we can see. So moving on, we have circulars, but do we have time? Sorry, 5 more minutes. Okay, I'll see what is most important that we can cover in this 5 more minutes. We'll try not to keep industry specific matters. We'll try to keep most generic matters. Some of the points are already covered in the notification. Okay, so these are a list of circulars. If we add everything, usually it will come to 100 pages. We don't have time. So two circulars anyway we don't need to cover. There is 177 and 179. It would have been covered in the morning session. That's relating to rate changes for goods and services. Okay. The first one is on mandatory disclosure in GST or 3B for interstate supply to unregistered person. Very simple. In the state revenue and B2B B2C people are not declaring properly. Which state is the destination state? So that is now being re-insisted. You file this properly. Okay. The other one is on ITC reversal. Okay, ITC reversal. The issue here is there is something called as reversal of ITC. There is something called as declaration of ineligible ITC in 3B. Okay, we have to be careful on that. Let me quickly take you through. If you see, this is how your 3B will be. You all will be familiar with this, right? You see, A minus B will be there in C, net ITC. After that, there is something called as D. And the D only, it is simply disclosure. It will not create any impact in your actual credit availment. Okay. So what they are trying to say is that you declare this properly and then this D is mere disclosure. Okay. Whatever you want to reduce, don't put it in D. Put it in B. Only then it will get deducted for the net ITC. Point number one. Second thing is, there is going to be another rule. Section 38 is completely getting revamped in this budget. Okay. I'm not sure how many of you are aware of this. We have all these conditions, right, for availment of ITC. You should have a tax invoice, goods and services should have been received, should have got reflected in 2B. All these conditions are there. Along with this, one more condition is going to be there, that it should not have been restricted under section 38. Now, what is that restriction? All these while, I am restricted if it is an ineligible credit, that is fine. Now, the recipient cannot avail the credit if the supplier has not filed this GSTR 3B. Okay. Supplier has filed this 1 and 3B. But whatever supplier has availed in this 3B, that is not reflected in this 2B. Then I cannot avail my 2B credit. So again, I'm just trying to clarify how the chain is going to work. Okay. So these kind of restrictions are also being brought now and expected to be brought. Not yet being implemented. Soon it will be implemented. So these kind of restrictions will be again brought in the system 2B itself. So once that is also brought, this B, where you can see that rule 42 and 43, you will also have this section 38 restriction as well. So that is what is under the proposal. This is proposed one, not yet being there in the current 3D. Okay. So if you see here, apart from this rule 42 and 43 which was there, in the B1, there is also this rule 38, 42 and 43. Okay. So the next one is on fake invoices. If I have to discuss on this, I don't think we will have time. We have to first take you through what are all the penal provisions. Okay, 122 is the penal provision, but there is any number of confusion on when there is any kind of fake invoice, how the penalty works. Under which section the penalty should be, taken, whether it is under 73 or 74 or 122, 122, 122, 1A. So many provisions are there. What is the correct provision? To keep it simple, if there is a fake invoice, A has supplied. What is fake invoice? Simple. There is an invoice, but there is no such transaction. Simply invoice is being issued, based on which the other person is availing the ITC. Now the point here is, if A is issuing B the invoice, then for A section 72, 73, 74 is not applicable because there is no supply. When there is no supply, there is no tax. So directly it goes into the penal provision under section 122. So same way for the recipient also, it is in the penal provision if he has availed ITC out of this, because it is in violation of section 16. Section 16 you should be having the tax invoice, you should have also received the goods or services. So in the case of fake invoice, that is also not being received. So all these will attract penalty under section 122. Apart from this, if there is any person who is going to retain any benefits of this, or at whose instance this has happened, for him also it is applicable, the penalty provision is applicable. Apart from all these things, based on the facts and circumstances, prosecution proceedings can also be invoked under section 132. Prosecution proceeding meaning imprisonment. That can also be proceeded. So I have briefed on those things. Circular 172 is again another important circular. refund for deemed export. Okay, deemed export is a case where I am selling to not an exporter. I am selling to only three categories. A person holding advance authorization, a person who is holding EPCG and EOU, 100% EOU. Only these three categories. If SEZR is a separate one, SEZR is anyway export, as good as export. It's a zero rated supply. Zero rated supply is export and SEZR. This is deemed export under section 147, okay, which is given by way of notification 48. So, if the supply is made to these three category, but again, if you see for this EPCG and advance authorization, they have to get a specific permit also. This is deemed export. The point here is either the supplier or the recipient, that is the the EPCG license holder or the advance license holder, either the supplier or the recipient, anyone can claim the refund. But with the declaration that the other person is not claiming the refund. Out of these two, only one can claim the refund. Now the point here is, if the recipient is claiming the refund, okay, whether for him the restriction of section 17 will be applicable. That is being clarified, a very good circular. What it says is that, first of all, this is not an ITC for him. It is a tax paid by him. It is not an ITC. Just because there has to be a debit for the purpose of claiming the refund, you are being asked to take this through the electronic credit ledger and then debit it for refund application. So doesn't mean this is a credit. This is not an ITC under section 16. So section 17 restriction is not applicable. Okay. The second point is on section 17.5. The circular clarifies on two things. This is the section 17.5 restriction. Okay. So leasing, renting, if you read this, the problem is very simple. You don't know how to read the comma. There is so much of comma in this that where to stop, where to continue is the confusion. Okay. Food and beverages, outdoor catering, beauty treatment, health services, cosmetics and plastic surgery, leasing, renting or hiring of motor vehicle, vessels and aircraft. So this is one way of reading. The other way of reading is, same way, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, leasing, renting or hiring of motor vehicles, vessels or aircraft. What is the correct way of reading? Enga stop panna, enga continue panna. Now they have made it clear, this leasing is only for motor vehicles. So which means you read it like leasing, renting or hiring of motor vehicle, vessels or aircraft. So it doesn't mean any leasing, whether it is restricted, because some officers read it that way. Okay, and then they say leasing, no, you cannot take the credit. Okay, it is not that way. The second clarification what they have given is, if you see after these 1, 2 and 3, there is a proviso. What does the proviso say? When it is obligatory for the employer to provide this to the employee under any law for the time being enforced, then you can avail the credit. Correct. Now the question here is, 1, 2, 3. That's not common, but this is not how the BAR Act is. After 1, 2, 3, there is a proviso. So the question is, should I apply this proviso for 3 or should I apply this for 1, 2 and 3? Now that is being clarified, it is applicable for all 1, 2 and 3. So which means, for example, let's say for example, you have this leasing, hiring and renting of motor vehicle. Okay. There are some states where the state government has a law that if the female employees are working on the night shift, then they have to be accompanied and they have to be dropped by the cab. So in that case, it is something obligatory for the employer to give it to the employee. Correct. By the law, not by their own policy. By the law. Okay. Then they can avail the credit. But that was actually being denied in many of the cases. There were a lot of issues on this because the officer had a narrowed interpretation that this provision is only under 3. How do you go and apply it under 1? Okay, so this has resulted in many disputes. So to clarify this, now they have given the circular that it is applicable for this proviso exception is for all the 3 categories. The next one is on perquisite provided by employer to employee. Very, very good, clarity, because there were different views on this in many advanced ruling. So as long as it is something that is covered as part of contractual agreement between the employer and the employee, any service provided by the employee to the employer, if the employer is giving it in the form of salary or perquisite, whatever it is not covered under GST. That is being clarified. Next one is utilization. This is again another important welcoming, clarification, because many of us are facing this when we are having this any kind of show cause notice or any kind of past demand. We may want to, now I am having so much of credit in my account. Why should I pay it by cash? I may want to pay it by credit. The officer will not accept. He will say, no, you have credit, but this is past due, you should only pay it by cash. So this is now being very clearly clarified that payment towards output tax, whether self-assessed in the return or payable as a consequences of any proceedings instituted under the provisions of the law, can be made by utilization of amount available in the electronic credit ledger. Very much welcoming clarification. But having said that, remember, interest impact is something different. Okay, just because you are paying here by credit doesn't mean you need not pay the interest. Okay, because for interest, section 50 subsection 1 is very clear. If you are paying any tax after prosecution under section 73 or 74, then this particular benefit is not available. That is clear in the section. Okay. But having said that, you cannot use this for payment of interest penalty and all that. Interest penalty, you have to pay it only using cash. Interest penalty, RCM, for past period, all these you have to pay only by cash. Okay. Refund under inverted duty structure. Another important clarification here is that if it is because of rate change, like yesterday I had 12%, I bought everything. Now today it is going to be 5%. There is a rate change, so purchase at 12%, sales at 5%. Can I claim accumulated credit inverted duty structure benefit? The answer is no. This is already clarified. But what we are trying to say here is this is not applicable for concessional, rate. That is, the rate continues to be 12%. You purchase at 12, your sales at 12. But for certain specific categories, you are getting concessional rate. Let's say, for example, government project, you get 5% concessional rate. Okay, then you can claim it under inverted duty structure. Okay, that is being clearly clarified. And then recredit, I think we already discussed on this. Unutilized credit export, I am skipping this electricity export. So this is also discussed. 177 we can completely skip. We'll end with 178. That would be the last circular, because 179 is again a rate circular. Okay, because this is very, very important, which we cannot miss. With this, we'll wind up last circular. Okay. One thing that is expected, we all would have discussed many things on litigations, what is going to be the future issues and all of that. Most of the issues are going to be on what is the scope of supply. Whether a particular transaction is covered under GST or not. That itself is going to be the major challenge in future. Okay. On these lines, one of the major issue which is already being faced by the industry at large is what happens when it comes to liquidated damages, compensation and penalty arising out of breach of contract or other provisions. So these things are already considered as if it is a supply by the tax officers. Multiple advance rulings for that, right? So the issue arises from this particular clause in Schedule 2. Schedule 2 is basically going to tell you whether a particular transaction is goods or services. Okay, first thing that is already being clarified is Schedule 2 is there only to say whether it is goods or services. But just because there is an entry in Schedule 2 doesn't mean it is a deemed supply. Deemed supply is only Schedule 1. Okay, so Schedule 2 is going to categorize this. Now there is under clause 5, supply of services, agreeing to the obligation to refrain from an act or to tolerate an act or a situation or to do an act. So 3 categories are there. Very good circular, a very good circular this is, where they are first of all giving examples of what gets covered in this. To refrain from an act, agreeing to the obligation to refrain from an act. What can be the simple example? Non-competent agreement. Okay, you pay a compensation for them not to enter into this geography. For not, then it is an agreeing to refrain from an act. The next example is agreeing not to construct beyond, let's say I have FSI approval for 25 floors. But because there is a next there is a next property, they are asking me, please don't go beyond 20 floors. Because the moment you go up to 25 floors, we will not get any sunlight. That's a request. So you are agreeing for it with a compensation. So this is an agreeing to the obligation to refrain from an act. Next one is industry is agreeing that during school hours, I will not do the manufacturing because it will create the noise. I get a compensation for it. Next day there is a school. So they are telling me, I have a manufacturing permit. Still, during the school hours, they are telling me, please don't do this particular activity because it's very noisy, it is affecting our thing. So I get a compensation. Okay. So this is actually business dealing where I am agreeing to the obligation to refrain from an act which I am otherwise eligible to do it legally. Okay. The next one is to tolerate an act. To tolerate an act, let's say a shopkeeper is allowing a hawker to operate. Basically, hawker is nothing but a roadside shop. Okay, so he is permitting to put up the roadside shop in front of his, particular shop. So let's say, for example, there is a big shop. Let's say Noidu Hall. முன்னாடி 4 பேர் கடை போட்டுருக்காங்க சொல்றாங்க நீங்க கடை போட்டீங்கன்னா எனக்கு பிசினஸ் நடக்காது எடுத்து காலி பண்ணு then he is saying I'll give you something நான் ஒரு உங்க கடைக்கு நிறைய பேர் வராங்க I'll pay you something you allow me to put my shop here then you are getting that money so you are agreeing to tolerate an act correct so the other example is the residential welfare association is agreeing for the school to use the loudspeaker. So school wants to use the loudspeaker that is next to a building. That is not being, the residential welfare association is creating a problem. ரொம்ப noisy-ஆ இருக்கு, நீங்க loudspeaker use பண்ணக்கூடாது. They are saying we'll give you a compensation, you please agree. So you are agreeing to tolerate an act. The next category is to do an act. To do an act. What does it mean? Let's say industrial unit, they are agreeing to, install an equipment for zero emission. They don't need to do it legally, but still they are doing it just because the nearby residential welfare association is requesting. So that's an agreeing to an act. Okay, these are all good examples of how it will get covered under this particular clause. You cannot get it covered for everything. Okay, for example, liquidated damages. So liquidated damages is another breach of contract. Okay, so it is not something. You are not entering into the contract for the purpose of breaching the contract. Correct. So when you are breaching the contract, there is a liquidated damages. When you say this is a consideration, what is the supply? What is the supply? Breaching the contract is a supply. Have you entered into the contract for the purpose of breaching the contract? No. It's like GST law, the business definition. It's a detailed definition. Closure of business. I don't know how they will insert it. How can there be a person who is in the business of closing the business? Okay, so how can there be a consideration just to breach the contract? You will only enter into the contract. Okay, so that is not being covered because most of the cases when the contract is breached, there will be a lump sum payment that is tagged like other income or common books. Then the department officer will say, no, you should pay tax on this. Now the circular is very clear about this. No need to pay tax, but if it is in the form of late fee, early termination of lease, then the forfeiture of cancellation of the services, for example, air ticket. If the air ticket is booked, there is a cancellation charges if you are cancelling. So it is part and parcel of the supply. There the tax has to be paid. Okay. So next one is compensation for cancellation of full. I am not getting into this. Dishonor of check. Very important point. This was actually being demanded for dishonor of check. If there is a compensation, then that need not be, there is a fine or penalty that is collected by the banker. For that, tax is not applicable. Next is penalty imposed for violation of law. What is the underlying contract? It is a penalty for breaching something. Okay, there cannot be any contract. For example, GST late fees katrom. Adhu GST poda mudiyuma? Something like that. It's not possible. Okay. Next one is very important point. Forfeiture of salary. This is the biggest issue. Notice pay on a pillar. And notice pay 2 months is a notice period. So if I am, asking to get ready within 1 month, okay, then there is a notice pay. Correct? You have to pay that 1 month salary. You have to pay to the employee should pay to the employer. So it was being taxed. I tell you the view that was taken is what is outside GST is employee giving services to the employer. In this case, employee is not giving services to the employee. This is, tolerance of an act. This is how the department was trying to understand it. Multiple advanced rulings are also there. Now what? The circular is beautiful clarification. It is not a tolerance of an act. It is an intolerance of an act. The employer is not tolerating such an act of the employee to leave early. He wants to, make it as a policy that if you are leaving early, you are not going to tolerate this. For this, you need to pay the money. Okay, very, very beautifully they have worded this. Amounts recovered by the employer not as a consideration for tolerating the act of such premature quitting of employment, but as penalties for dissuading the non-serious employees from taking up employment and to discourage and deter such a situation. Beautifully they have given this clarification. Therefore, such amounts are not taxable as consideration, because where is the agreement? There should be some supply. Where is the supply? There is no supply at all in this case. Next one is late payment surcharge and fee. It is naturally bundled, so in which case it is taxable in relation to a contract. Fixed capacity charges for power, it is not taxable because electricity itself is exempted, so this is also not taxable. Cancellation charges, it should be assessed along with the principal supply. However, forfeiture of earnest money for immovable property. For earnest money, the property for 1 to 10%, some X percentage will be paid as a deposit. And then they say, no, I don't want to proceed with this property. So that money gets forfeited. Correct? So this is like a deposit which will get adjusted if you're going ahead with the property. But if you're not, if you're cancelling, then this earnest money you cannot get it back. So in that case, it is not a taxable supply because there is no contract. There is no contract. The contract was only to, get into the immovable property. There is no contract. Same way for government bidding. Okay, if that gets forfeited, then there is no tax on this. So I think, broadly we have covered all these points, but important issue in this circular is, it is giving everything as clarificatory, okay, which means it's not something that is prospective. Clarificatory meaning it is only trying to give an understanding of how the law was always expected to be understood. Which means it is retrospective. Having said that, if somebody has already paid the tax, in these cases, with going by a different view in the advance ruling and other things, then they can always apply for the refund. Okay, but that is not being clarified in the circular. Circular doesn't say so. I am only saying you can apply for refund. Okay, but that's the understanding of it. So with this, we are coming towards the end of the session. So thank you very much. I think we have exceeded the time. Whatever half an hour late that you have given me, I have already compensated. Okay. So thank you so much for staying late and still, having a patient listening. I hope I have done some justice for these, though I had to rush a little. So next time probably we'll need to factor a little bit more time for these kind of situations where we are bombarded with a lot of notifications and circulars. Okay. Thanks a lot to all the participants, and thank you so much again to all of you to make this a very, easy and at the same time very interactive program as well. I can see all of you being completely involved and interactive during the session. Thanks a lot.
Yes, thank you so much. As ma'am said, we'll plan for our next 3 days workshop on GST. So that we'll have a lot of elaborated sessions and topics, and we can also have Q&A sessions where everyone can be brainstorming, and I hope the session also was brainstorming and we were also listening to it. So thank you so much, members, and thank you so much, ma'am, for the time.